Good morning and welcome to the Killik and Co market update. It's been a positive week for markets. We've still got one trading day left of this month, but it's looking likely that this may well have been the best month for the US technology sector since November 2023, which just goes to support the view that the best days for markets tend to happen fairly quickly after the worst months. One reason for the strength this week has been a court ruling in the US that said the tariffs the US has imposed are not legal, and that was taken well by markets. An appeal was launched immediately, so we'll have to wait and see what happens there. We've also come to the very end of earnings season, in which S&P 500 companies published their results for the first quarter. Overall, it was better than expected, with 78% of companies beating expectations in terms of earnings and 22% meeting or missing expectations. Nvidia, always one of the last companies to report, published results this week. These results were well received and they caused the share price to rise by 4% on the day. Nvidia's results are seen as particularly important because of the company's size. It's currently the second largest company in the S&P 500. Microsoft is now back at number one and Apple is now in third place. Here's a comparison of the three share prices over this year to date. You can see that Microsoft and Nvidia in the purple and green have recovered well from the lows of March and are now back in positive territory since the 1st of January, whereas Apple in the pink is still down 20%. Although we've had some decent company-related data this week, there have been some weaker data points for the broader US economy. First up were the US GDP growth figures. These ones compare GDP in one quarter to GDP in the previous quarter. As you can see, there was a contraction in the first quarter of this year. In fact, the first contraction we've had in 3 years, and so we'll be keeping a close eye on the trend there. The second bit of data was the percentage change in US pending home sales versus the previous month. Pending home sales are when the contract has been signed but the transaction hasn't yet completed. The data point for April was particularly negative. This data has always been quite volatile, but the most recent drop could be a sign that US consumers are feeling a bit nervous, and so we'll also be tracking this trend closely as well. So these two weak data points could potentially be signs that tariffs are starting to hurt the US economy. And lastly this week, it was announced that BYD, which is China's leading maker of electric vehicles, is now selling more fully electric vehicles in Europe than Tesla is. Since 2022, BYD has ramped up its level of production much more quickly than Tesla has. Here's a chart comparing the quarterly production of vehicles by the two companies since 2018, Tesla in the pink and BYD in the green. They were tracking each other fairly closely until 2021, but BYD has since accelerated production and now appears to be producing more than twice as many vehicles as Tesla. Here's a comparison of the two share prices. Again, BYD in the green and Tesla in the pink. They have diverged since last year. Chinese vehicles are generally available at much lower prices than vehicles from the big Western brands, and this has caused problems for a lot of these very established brands. Moving on to have a look at next week's calendar, it's looking very quiet now we've come to the end of quarterly reporting season, and there are no Killik covered companies scheduled to report. So have a great weekend, and we look forward to seeing you next Friday.